In this video, I want to show you how you can compare analysis of financial data and metrics of multiple companies at one time so that you can do research for stocks and stuff like that. All right, this is a very, very simple way of doing things, and hopefully this video is useful for you at the same time. Okay, the first thing you want to do is you go to StockPenguins.com. You can come in over here at the tab here called Compare. All right, and right here, I'm very interested in big technology companies purely because like these are the biggest movers in the space. So investing into them is a no-brainer. But at the same time, I do want to invest into something, and I want to like compare business models which are quite similar to each other. There's no point for me to compare two companies that are too dissimilar to each other. Otherwise, it does not make sense at all, right? So I'm aware that, for example, Facebook is a advertising company. They make majority of the revenue from advertising. Right? So I'm going to compare Facebook, and I'm going to compare Google, right? So a lot of the times in big tech, for example, or with people who do not really look at the numbers, they don't really understand that Google, for example, is actually a way bigger company than Facebook. Okay, so if you can see here, over here on the left hand side, Facebook's about 1.8 trillion, and then Alphabet is about $3 trillion company. So if you think about it, actually, Google is almost 30 to 40% bigger than Facebook alone, which is quite an insane thing if you think about it. All right. Another thing that I want you to watch out for is the PE. So the price to earnings, for example, is at a 23 in the last quarter, but on a trailing 12 months is about 25 for Facebook. And then on Google's side, it's about 19 over here, and then a PE of 26. Right. So you might be asking, why is that so? Right. So a comparative analysis will kind of suggest to you that price to earnings is basically how much premium do people give on your earnings, and you can clearly see that Google over here is actually selling at a discount compared to Facebook. So people actually think that that Facebook is going to grow way faster than Google. Than Google. That's why they give it a premium in the first place. So from the numbers, you can basically see how people view the company and the prospects of the company itself. All right. So a bigger company, obviously, it may grow slower, so you have a lower premium. It kind of makes sense as well. Yep. The PEG ratios, I don't really look at this. The PE versus the average 5-year PE. So for example, for Facebook, right, the PE right now is actually under the 5-year PE, which means that on a historical basis, it's actually trading cheap compared to the valuation. Versus on Google, for example, it's actually trading over the 5-year PE, which is very, very interesting, despite it being smaller than Facebook at the same time. So Facebook still a cheap, in a sense, it's a cheaper company than Google because of this, purely because of this. Yep. All right. So other things you want to look out for: profitable, growing revenue, etc., etc. Right. These companies are very big. We're not very, very concerned about their future. But what you want to look at basically is that when you're doing comparative analysis, especially, you want to look at market size, how much you actually think that this company can grow, for example. Right. So you can see here 1.86 trillion, 2.14 trillion market cap. This is basically the last quarter, right? This is not the live stats. If you want to go to the live stats of the market cap and stuff like that, you can just press this live over here, and you can basically see this is the live market cap over here. So Google is about 3 trillion, and then Facebook is about 1.8 trillion so far, right? If you want to see similar companies within that bracket of technology companies, you can see these are the technology companies that are basically being compared to Google and Facebook at the same time. All right. So let's go back to the earnings because that's the more interesting part of it. All right, we can clearly see that in the past 10 years, because both of them have been public companies for quite a long time already, is that we do know that these companies actually grow revenue very, very consistently, right? So every single month, every single year, their revenues have been increasing. So this is not a problem. You can clearly see it's going up, and it's not a straight line, but we do know in the advertising industry, for example, in quarter 4, right, the advertising also goes up, right? So if I change this to actually a quarterly basis, right, on a 10-year chart, for example, you can see like generally in Q4, maybe it's not, um, yeah, basically in Q4, advertising revenue generally goes up. And the reason why is because people are spending on Christmas shopping, etc., etc. But yeah, you can see both companies very, very steady increase in the revenues and then the profits at the same time. But however, it's very, very interesting because Facebook, for example, is generating $47 billion every single quarter, right? Google is generating 96 billion. So if you think it's, in a sense, it's way more impressive to generate way more revenue, yeah, I do believe that Google is just a way bigger company. So you technically can't really even compare it to the same thing because they're not apples to apples. Like 96 versus 47, it's almost a 2x increase in revenue. Okay, so yeah, it just goes to show the Google Ads advertising machine is very, very strong. The gross margins also kind of reflect that, right? So gross margin here, For Facebook, it's generally advertising, so it's a very high gross margin business. I do believe that because Google has a cloud business and then different types of businesses, YouTube, which is advertising, cloud business, Waymo, etc., etc. Maybe their gross margins are just lower. Yeah. All right. And then you can see the net income, for example, the net income both are increasing, but it's not a 2x increase in net income, right? So Facebook actually generates more net income than Google here at the same time, right? So other things about cash flow, EPS, earnings, stuff like that, dividends, you can go and check it out from here. But generally, for example, if you had $10,000, $100,000 to buy stocks in the market, for example, and you're kind of deciding between these two companies, right? Right, you gotta look at the stats, you gotta look at the metrics, and then you can basically judge for yourself which one is a better buy, right? Because both companies are very strong companies, right? You don't really have to worry about it going bankrupt, so that's not a concern. The concern is the valuation and then the price that you buy it at. So the valuation from a just pure non-biased perspective, it seems like actually Google is like trading cheaper than Facebook. But also at the same time, Google is like way bigger than Facebook. So maybe people are putting a discount because they think that Google cannot grow anymore, or because of its size, it's going to find it difficult to grow revenue consistently. Whereas for Facebook, for example, maybe Mark Zuckerberg is basically opening up new verticals, streaming, VR, AR, and then like the glasses and stuff like that. So it may grow at a larger pace, right? No matter what your situation or analysis of the thing is, always just remember, look at the metrics, and if you can compare it against people similar in your industry. All right. If you want to find more things to compare it against, you can go over here and check out similar companies, and then you can go and find it as well. All right. Thank you.